Hi, welcome back to another video. So on April the 4th, when markets tanked because of Trump's tariffs, retail investors or individual investors like you and me bought $4.7 billion worth of stocks, buying the dip. Let that sink in for a little. Self-directed investors who invest on platforms like Robinhood, Questrade, Wealthsimple, Moomoo, Vanguard, Fidelity, you get the idea. Non-institutional investors. As Forbes puts it, they are a force to contend with. So if you're still investing through a financial advisor or through an investment advisor, you're probably paying too much. Today, more and more people are choosing to invest for themselves because they are running away from high fees in banks. Now, this trend was accelerated around the time of the pandemic. With so many stimulus checks being sent out, we were all hunkered down under lockdowns. People paid down their debt, they reorganized their finances, they started saving. And then, of course, with advances in technology and all these investment brokerages popping up, most people decided to try it out for themselves. And since then, it has grown significantly. So many people in the millions are investing for themselves. And so that was manifested in what happened on Thursday, April the 4th. Individual investors alone, as reported by JP Morgan Chase, invested $4.7 billion. That's impressive. Now, something to note is that with increased online activities comes increased risks, scammers, hackers, and so on. So that's something to keep in mind. So in this video, I will share with you 6 important factors to consider when choosing a brokerage to start investing for yourself. Oftentimes, I'm asked by people, how do I know what is a good brokerage to open up an investment account on? Or can you recommend a brokerage on which I can start investing? I only have $5 or I only have $10 I can spare. Or I think I'm paying too much at the bank, but I do not know how to start investing for myself because I wouldn't even know how to choose a platform or a brokerage. Well, this video is for you. So here we go. The first step is to determine your investment goal. Are you a long-term investor or a trader? Because there is a difference. A trader is somebody who invests in the stock market, buys stocks for a short time, holds them, and then turns around and sells them to make a quick profit. Investors are people who buy stocks and hold them for a long time in order to build wealth over the long term. Kind of like me. I am a dividend investor, so most of the stocks that I buy, I plan to hold until I retire. Now, if you're a trader, for instance, you'd be interested in a brokerage that offers real-time market updates. Brokerages like Interactive Brokers, which may not be what a long-term investor is looking for. I am a dividend investor, I am a long-term investor, and while I am invested in an advanced platform, I'm not looking for the split-second updates in market data. I am looking at a platform that has good resources and tools and charts and market updates, but they don't have to be to the split second. Also closely related to your investment goals are your investment skills. If you are a beginner investor, you're probably not looking for a platform with all the bells and whistles. I often get asked why I choose to invest on Questrade as opposed to Wealthsimple. And while both platforms are quite good, I think that Questrade has a more advanced offering, a little more bells and whistles than Wealthsimple. So once you determine what your goals are and your investment skills are, that will be the jumping off point for selecting a brokerage. Number 2, regulatory compliance to ensure that your investments are secure. As I earlier alluded to, with increased online activities comes increased risks. In selecting a brokerage, you want to make sure that it is a member of or it is covered under some investor protection fund or insurance. In the US, for instance, investments in securities, meaning if you invest in the stock market, your investments will be covered under the Securities Investment Protection Corporation, SIPC, a federally regulated organization or which operates under the federal authority. Under the SIPC, investors in the stock market have their investments covered up to a maximum of $500,000. That is very different from the FDIC, which covers savings. SIPC covers investments in securities in the stock market. And occasionally, you'll hear investors who are saying, my investment portfolio is almost reaching $500,000. I want to start looking or considering another platform or to move part of my investment to a different institution because they want to ensure that as the investment grows, they continue to be covered. In Canada, the Canadian Investor Protection Fund, CIPF, covers investors. This is a not-for-profit organization run by member institutions, banks, and brokerages that offers investments to the public. The CIPF covers investments up to a maximum of $1 million per institution. In the UK, the Financial Services Compensation Scheme, the FSCS, covers investors up to a maximum of £85,000 per person, per firm, or per institution. If you're not in the US, Canada, or the UK, do some research on your country to determine the fund or insurance that covers investments in the market and make sure that before you select a brokerage to invest on, it is a member of such a fund or insurance so that should a brokerage or a platform go out of business, your investments are protected. Usually, the way to find out whether a brokerage or a platform is a member of an investor protection fund or insurance is to go to their website. Most of them will have a symbol or a logo of the investor protection fund in your country on their website. So in Canada, the CIPF, in the US, the SIPC, and so on. Now, if you enjoy content like this, please consider liking this video and subscribing to my channel. It helps the channel grow. It also encourages me to continue making these videos. Share with family and friends and help me get to 1,000 subscribers. The third point to consider in selecting a brokerage is the cost of investing. Do some research and understand the fee structure of any platform before you open an account with it. Because trading fees and commissions, transfer charges, or foreign exchange fees can add up significantly and eat into your gain or into the gain of your portfolio. I invest on Questrade, for instance, and because I can hold stocks and receive dividends in both Canadian and US dollars, there is a foreign exchange commission. I think it's about 2%. So if you're not aware of that, that can eat into the gains of your portfolio very quickly. As a dividend investor, for instance, I know that dollars and cents add up pretty quickly because sometimes you have 20 shares of a stock or an ETF or an index fund, and all you get in a quarter in terms of dividends is probably $1.50. Now, if you have to pay $5 for every time you buy or sell a stock, then it's a self-defeating proposition. You're not making any progress. You're just on a hamster wheel. So fees can really eat into your portfolio and keep you from building wealth or growing your portfolio. So it's essential that you look at the fee structure before you decide to open an account with any platform. Now, remember that a lot of DIY investors or retail investors have moved from big banks to invest for themselves in order to minimize their costs, which can run anywhere from 50 basis points to 1.75% or even 2.25%. And that may not be a big deal when your portfolio is still little, but as your portfolio grows, 1% on your portfolio can add up to a lot. Number 4, fractional shares. Because time in the market truly beats timing the market. Oftentimes, once I receive my dividends, I want to get them back into the market right away so that it starts working for me. Now, if I had known ahead of time, I invest on Questrade, and until recently, Questrade did not offer an option to invest in fractional shares. Since early this month, we can now invest in fractional shares. Here's an example. I invest in Visa, and the share price for Visa, as I record this video, is over $300. So because I want to build this position, it means that until early this month, when my brokerage, Questrade, started to offer fractional shares, I'd have to build or accumulate money until I have over $300 in order to buy a whole share of Visa. But with fractional shares, even when I receive $5 in dividend income, I could have bought a fraction of a Visa share. And so it's important to determine this ahead of time if you do not want to let your money sit on the side until you can afford a whole share. Even if you receive new money, not necessarily dividends, even if it's $20 or $10, and be able to buy a fraction of a share that you want. Number 5, customer service. This is especially important for new investors. How do you reach customer service? Can you call them? Can you chat with them online? Can you send emails? What is their response time? How knowledgeable are they? The quality of customer service will allow you to stay longer on a platform and will help you build your wealth. You can do some research online, read reviews, try and call, try and chat with them online to test their services so that you're not forced to close an account and move to another platform, because transferring your investments from one platform to another costs money. So it's important to do some research into the quality of customer service on any platform before you open up an account with them. I've been investing with Questrade since I became a retail investor, and I can tell you, I think their service is fairly good. Even if you call and there's a backlog, they clear through any wait times fairly quickly. It's been over 3 years. I can't speak for a lot of other people, and this is not a promotion for Questrade, but I can tell you I've been generally very happy with Questrade so far. And so do some research for yourself, because once you move into a brokerage or once you open an account, you don't want to be moving within a short window. It's a lot of work. Last but not least, consider a brokerage that offers a lot of research tools, education, and other resources. Real-time financial news for investors, especially for traders, is critical. If you're new to investing or you're a beginning investor, a brokerage that has education or tutorials that you can follow will ensure that you start off on the right footing. So do some research, go on their websites and look at what they're saying is available. Look at reviews from people who are already using a platform. I am generally happy with Questrade, the resources that they provide. Like I said, I've been asked in the past by some viewers, why don't you invest with Wealthsimple? Why did you choose Questrade? I think that the resources that Questrade offers, especially the older interface, the age, for those of us who started investing over 2 years ago, before they rolled out the current interface, and the older interface I think is available to everybody, is very helpful. It has a lot of fields so you can analyze your portfolio. It has adequate information and resources for long-term investors to manage your portfolio. But do your own research. It's important to open an account, an investment account, on a platform that offers good resources. I have recently been researching another platform on which I can open a new investment account. And I think, for instance, that Moomoo has a wealth of resources for analytics and research. It provides information on institutional investors and so on. So that is a very rich platform as well. So no, this is not a promotion for Moomoo. You have to do your own research. I'm not being sponsored by Questrade or Moomoo or any of these platforms. Also understand that while today you may be a beginner investor and so you just need the basic functionalities of a platform, as time goes on, you might need more bells and whistles or more advanced features. So that's something to keep in mind. And now, as a bonus, it might be helpful to also learn about the reputation and integrity of a platform. Anyway, I hope you enjoyed the video and found it helpful. If you did, please consider liking this video and subscribing to the channel. I'll see you in the next one.